that are hopefully administrable. So let's look at the -18 rules briefly, and under the -18 rules, you can have a characterization of the transaction can either be a transfer of a copyright right, a transfer of a copyrighted article, the provision of services, which is really a very minimal category, and then, so those are the three sort of areas. And in order for you to have a transfer of a copyright right, there has to be some copyright rights that have been transferred, and the types of rights that we're talking about are, for example, the right to make copies of the program for distribution to the public, right to prepare derivative works, right to make a public performance of the computer program, or a right to publicly display the computer program. Now, if you think about cloud transactions, in many cases, there really hasn't been any transfer of a computer program or software code, except for that small scripting code that I mentioned before. So that I think that in many cases, the -18 rules shouldn't apply to what we think of as sort of cloud transactions. There hasn't, when you look at the transfer of the copyright rights, there hasn't been an exercise of a display or a performance right, because that requires copyrighted content to be made available to a human audience. But when you consider what's happening in the cloud computing transactions, the execution of code is internal within a computer and doesn't cause or allow any perception by the human user in the graphical interface. And we can look to copyright law to determine that should be the case. So if we're not under 861-18, then what is the proper place to look for trying to characterize the transaction? And there's another set of rules. It's in the U.S. it's Section 7701E. The only reason I mention that is because it's actually referenced in the OECD e-commerce report as an appropriate standard to look at in determining whether something is a lease or a service. And so the factors that are cited in 7701E are actually adopted by the OECD and the TAG e-commerce report from 2001. And when you look at the factors are really intended to determine whether you have a lease or services. And when you go through the factors, you find that when you apply them to the cloud computing transaction, they favor a services characterization, because going through the factors, the customer isn't in physical possession of the property. If you consider that the cloud provider retains control of the hardware and the software, the customer doesn't control the property, doesn't have any kind of significant economic or possessory interest, and the service provider bears the risk of non-performance. And then finally, the fact that you have multiple people using the software and the hardware at the same time in the multi-tenant model that we described. So even though the customer has the ability to provide instructions to operate the program that's sitting on the server, that remote access doesn't provide possession or control of the hardware or the software assets. So based on those factors, you'd say that the services characterization should apply, even in cases where the user might be able to designate on which servers its data could be stored or its applications could be hosted. I'm going to skip the next few slides because I know we're running a bit behind time. These next slides are just mostly some of the US rules that flow from determining the character, but I don't think we need to focus too much on those because that's specific to the US, and each country will have its own sort of source rules. But what's important to note is you have to determine the character of the income before you can then figure out what the source rules. So much will flow from determining the character of the income. So then let's turn to some of the non-US cases that have dealt with the question of how to characterize cloud revenue or cloud type revenue. And the first, some of the countries, as I say, have adopted rules for classifying income from various transactions involving computer software, but no country, at least of which I'm aware, has adopted rules yet specifically dealing with cloud computing, some of the business models that we've been looking at. So you're trying to figure out how to apply those existing norms to the transactions that we have today. The case law and the rulings that we see in other countries are really kind of a mixed bag all over the place. Many of them will determine a royalty characterization. Some will say that there isn't a royalty, it's just business profits or services. And even within countries, like if you take India, for example, between the high courts in India and the ITATs in India, there are conflicting decisions. So there's a lot of uncertainty about how to characterize these transactions. In the first case, I wanted to talk about eBay. eBay operated a Indian-focused websites that allowed Indian users to buy and sell goods and services, and the customers basically paid a user fee to eBay. And the question was whether those user fees were business profits or whether they were fees for technical services subject to withholding tax. And the income tax, the ITAT in Mumbai, held essentially that they were not fees for technical services, that they didn't provide any managerial services to Indian users, and they just represented a facility, the use of which didn't constitute any kind of technical services, so that there was no human intervention, and there was really there was nothing other than no technical service that would constitute a royalty under the treaty. In the next case, Pinstorm Technologies from 2012, another decision from the Mumbai ITAT. Pinstorm purchased keyword advertising from Google Ireland on behalf of its customers in India. And again, the question was whether the payments that Pinstorm was making were for the right to use industrial, commercial, or scientific equipment under the treaty, and thereby were royalties. The ITAT ruled that the payments were not royalties because Google was just posting advertisements of Pinstorm's clients, and the client didn't have any right to access the Google portal. It was merely viewing the information or accessing the information. There was a very similar decision in Yahoo in 2011. In another case, Wright Florists from just this year, actually, you had an Indian florist that was making payments to Google and Yahoo for online advertising. And this time the ITAT in Kolkata ruled that Google and Yahoo didn't have, first they didn't have a PE because the servers on which the websites were located were outside India. And second of all, there was no fees for technical services subject to withholding because the services were entirely automated and didn't involve any human interaction. Now, so those cases were all pretty favorable, those rulings and cases, but if you look at the more recent ones or some of the other ones that we've seen, there's another one called ThoughtBuzz that came out in 2012, where Indian users paid subscription fees for basically social media monitoring services. The company would look on Facebook, Twitter to see, on behalf of clients, to see what was being said about their companies. Again,